Hello, you're watching channel 127 and this is Capital Talk with me, Nur Akthar Amin, and today we'll be discussing on Euro debt crisis more in depth. And to talk about it further, we have our special guest, Mr. Martin Wong. He's the editor of Traders Truth Wwealth.my. Welcome to our studio, Mr. Martin.
Thank you, Akthar. It's good to be back.
Thank you. And okay, for this very first part, and of course we have our second part tomorrow. So for our very first part, let's talk about the European crisis spark. Yes. Yeah? Could the European crisis spark a sudden market collapse, Mr. Martin?
Well, if you look in terms of economic cycle, how it works, there always be market collapse. There's always be market boom. You know, it's comes and go, just like the seaside tide. It comes and go. Now, what is more important is look for opportunities when there's market collapse. Now, the market collapse that we will see in Europe, that can be compared to what we've seen in 2008, the Lehman Brothers crash that we have, where the whole market just tanked, where Hang Seng market fell down by 1,500 points. So that is the severity that we're talking about. Whether this time should Greece default or Spain default, would we see this kind of sudden collapse? That's yet to be seen. However, as an investor, which I advise people, and people who is watching this program, I hope you are an investor, is to really focus on company and not focus on the macroeconomics. Because if you read and if you listen to what the talking heads on the TV, they keep telling you about the market collapsing, you'll be all frightened. Now remember in 2008, at that time we were managing clients' portfolio, you could see even as the market was collapsing, good consumer stocks in here we're talking about, I'm not going to go to specific detail, in consumer, they did fall, yes, but the severity was very, very small compared to the overall market, because these are consumer stocks where people still need to eat, where still people need to buy, and those are regular consumer staples. So that helps provide some sort of support in the market. So another point I wish to look at it, if you look from an economic cycle, where they always, in any economic cycle, there's always 5 years we're looking on the average. There'll be 3 years of boom, 1.5 years of bear market. So the 3.5 years of bull market and 1.5 years of bear market. So what the economic leaders are trying to do is to try to extend the bull market is as long as possible, even to a point to eliminate bear market. But if you look back at the history, that's not possible. So a lot of these things are actually caused by leaders who are trying to change, the nature of the law, which is you have boom and you have bust.
All right, okay. And more on the Eurozone is at a decisive point, if you agree with me, Mr.
Yes.
Martin. And the single currency is on a verge of annihilation, but hopes, or rather light in the end of the tunnel, was imminent when the European Central Bank and US Federal Reserve will this week deliver measures to boost growth and contain the Eurozone debt crisis. So what is your opinion on this? I mean, have the leaders finally come to their consensus to resolve the Euro debt crisis, or is this part of another PR exercise?
No, funny is, as you can say that, like from my previous reply, economic leader and whatever leader it is, if you think of it, their job is to stay in power as long as possible. To stay in power as long as possible is try not to make the so-called unfavorable decision where you do things that might hurt people, and try to make those favorite decisions delayed as long as possible. Now you look at in terms of what's happened in Greece. Okay, Greece has been saved a dozen times before. There was a first bailout, there was a second bailout, and all this while, Greece has missed all their bailout target. Now this coming 20th of August 2012, we are coming a few more days to it, Greece have to pay ECB 3.8 billion to make sure they meet the bailout target. Now, there's also, at the same time, now if they meet it by paying the 3.8 billion to ECB, and then the following week, they're going to ask for another third bailout. Does it make sense? So all this, to me, in a way, it could be a PR exercise, but it's also in a way to sustain liquidity into the community. Because if Greece government doesn't get it, the whole market might just collapse, right? But at the same time, you look at it, giving them another bailout is like asking for a longer rope to hang themselves, right? Now, a funny story that I came across is the other day, even with all this crisis that we've seen, even the priests in Greece have not been paid yet, and they went on a strike. So that's what I'm saying, because all these are internally happening in the country, and everyone don't want to make the favorable decision. And the decision is to try to prolong it as possible, but you may come to a point at a time that Greece may default, and the same goes for Spain too.
All right. Okay. Since you touched on ECB just now, yeah, Mr. Martin.
Yes.
According to an article in your web, you quoted Mario Draghi. Did I pronounce his name right?
Mario Draghi,
Okay.
you got it right. Yes.
The ECB head who said that the ECB will do whatever it takes to preserve the euro and by extension the euro banking system. So that means they will print over 1 trillion euros to have a lasting impact and keep the euro Ponzi game going. So can you explain further on how did you derive to this, and printing 1 trillion euros, will that help?
Yes, in short term, yes, it does help. Now remember, the statement that Mario Draghi did give out, that the intention to print euro, that has sparked almost a 4% to a 5%, depending on which market rebounded in the whole situation. So after a few days, he didn't follow up with the statement. And then I think yesterday, he did say that the printing may begin sometime in September. As a result, we did see the euro drop further and the stock market rebounded that. So what does this mean? It simply means that they are actually using the money to buy into the Spain bonds in this case, so to keep the yield low. Right now, every time when the bond yield goes above the 7%, it's just like a hazard that that we have in KL when the flood comes through. If it goes through a certain level, that is the water hazard. Now, for the point where we can see potentially bailout is happening, that's a 7% bond yield. So now, what these leaders are trying to do is to make sure that level doesn't go up to 7%. If it goes below 7%, everyone is quiet. So they have to do this kind of printing, and to me, that's temporary measure. Now, when this liquidity, because when you're buying a lot of bonds, so they will have a lot of liquidity. So eventually the liquidity would flow into the equity market, and that will push up the stock prices higher. So I just want to share with you, since we are talking about printing money,
right.
I want to have this. Oh. This is a currency note. If the camera can zoom in, you will see this is a 50 trillion. Is it dollar? Yes, it is dollar.
Yeah, $50 trillion.
You may ask me how much is this in ringgit?
Right. Wait, it's not even 50?
No, it's not even 50. I think it's close to about 40 ringgit.
All right.
So you can be a trillionaire by buying a note of Reserve Bank of Zimbabwe.
It's worse than rupiah, right?
Yeah, it's worse than rupiah. And this is very interesting, because I tell you, I'm not saying that Europe or US dollar may go into a hyperinflation like what Zimbabwe did back in 2009. But the fact that you have so many zeros in here, that's scary, isn't it? Right. Remember that.
Okay, thank you for bringing that. That's like, I thought that was supposed to be severe for me. Right. So a currency union requires strong political leadership and complete integration of monetary institutions within a single state to be able to survive. Yet there still seems to be a collective reluctance to acknowledge the scale of the requirements for full monetary and fiscal union in the Eurozone. So Mr. Martin, we're asking you, why is that?
I think again it goes back to the European leader in the state of denial. There has been all this while, they know the problems has been around.
Right.
Now, let's go back a bit more. What do you believe in? Do you believe in a free country, free economy, where everything is run by merit, or you believe in a central control government? Let me give you an example what it means. A free economy like Malaysia is a free economy, or central control government where everyone, the society, is entitled to something. What does it mean? It means if you have a group of 4 people, the rich will be taxed, and the tax will be used to subsidize the other 3 who are entitled. That is what we call socialists. Now, I'll give you a good example. This don't happen in Europe, but this happened in US. A very good example. A man in Oregon was fined for using rainwater in his home.
Right. Why?
Precisely. And that's the reason why is because the rainwater belongs to the government and belongs to the people. Now, if you want to use the water, you have to use tap water. But because of the situation they're having in US, this poor guy is trying to save some money.
Gosh.
So he uses rainwater to collect it to feed. Now just imagine in Malaysia, right? You have to go to jail because for collecting rainwater to feed your chickens. It doesn't make sense, right? So that's what's happening in a lot of this country where socialists, where the central government will tell you what to do and what to think. So what has happened now, these people, and of course they will support the government because they are entitled to a lot of benefits. They have food stamps, and they have a lot of social securities, all this being paid for. They will continue to vote for leaders who give them all this. Now, leaders that is not favorable, if you look back at the French leader, ex-president Sarkozy, since he left or he lost the election in May, now he has been investigated for tax evasion. So that's what leaders will try to stay as long as possible to play, the musical chair, keep the Ponzi scheme running as long as possible. That is, to me, it's very sad, and what's actually happening now.
All right. Okay, I think that's all we have for our part 1 for Euro debt crisis more in depth today. And make sure you'll stay with us tomorrow on Capital Talk for our second part. We'll talk about the euro currency. Will the euro currency stay and the future of euro? Thank you, Mr. Martin.
Thank you.
And I'm Nurata Ramin. Stay tuned to Capital Talk on the Capital.